Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for January 15th, 2019. And we're talking financials. Now, the market did do our alternate thesis, bullish bounce, short squeeze rally. But is this just the beginning, or is this the end of a little trick-or-trap trade? We'll watch this, but we'll focus on the financials for tonight's video. We already had JP Morgan report earnings today. We can see this on the chart that it had an estimate of roughly 2.24 on the data here and reported 1.98. So it missed a little bit, and we were looking for any type of downside activity. Did not get it. JP Morgan, it rallied sharply. So did the equity market. So did the financial sector. So did the technology sector. The other company reporting, or at least big company, reporting financials was Wells Fargo. Now we can see its reportings and earnings here and what the results and performance were. So this is a little bit of a beat on the earnings, or at least a little bit of a performance that was strong, yet the stock went down, up, down, and then back up. So we're going to be having reports from Bank of America, US Bancorp, and the big one, Goldman Sachs. But first, we'll jump back to the XLF, which is our broader financial sector spider. And any open positions, any trades, any ideas for the short term will come from the departure from $25. That is and has been the lower bound of our trend line and sideways performance. It's now the 50-day moving average, and like everything, it's happening on lower and lower volume. If you are going to do anything, it will be to take profits and be cautious into these pivot points. However, as today showed us, we have to be prepared for unexpected alternate thesis movements, and that would be a specific breakthrough beyond 25 per share into this open air pocket that could propel the financial sector and the stocks even higher than their current targets. We can also look at the financial sector on the weekly expected move grid. Now these are key levels, and it's not saying much more than the weekly expected move for the XLF is also the 25 per share level. That's our pivot, that's our price point. So we're going to be watching this level very closely in the next few days as more stocks report earnings, as the S&P itself blasts higher and does our short squeeze alternate thesis toward 26, and even higher than that if that happens. Otherwise, we'll keep playing cautiously or defensively on the short-term basis into these levels. XLF's key spot for the next couple of sessions is 25 per share. We can also see a similar theme that connects all these equity stocks and all these financial stocks. It's going to be the weekly expected movements. Now, JP Morgan had an inflated implied volatility because of the earnings, but that's coming back to earth. You can see that. On the weekly expected move, on the implied volatility, earnings are now behind us. So it's going to be coming back into a more normalized implied volatility chart. The same is true for US Bancorp. 37%, 26, and on down. That is behind us in Wells Fargo, 26, 22, 24, and in front of us with a stock like Goldman Sachs, 52, 36, 33, and you can use Don's method of plotting the charts, expected movement, for any open positions and earnings plays. That was his video last night talking about earnings, Netflix, and other. Will take us back to our expected move for Goldman Sachs. And that's just going to be the consistent theme as we look at these markets. Sure, sell swing, rally, retracement, flag opportunity. Nonetheless, the key pivot point to watch in the future for earnings. Now, earnings will take precedent over this expected move, but it's going to be roughly 182, 183. What's the little expected move for Goldman Sachs? Roughly $7.50. And that'll come from the earnings as it's announced in the short-term future. That is the 16th, which is Wednesday. So tomorrow we'll have earnings on Goldman Sachs. That's also true for USB, US Bancorp, which is reporting also on the 16th. And you can see how all these stocks will play into the weekly expected move. Again, looking back, JP Morgan just released those earnings, surprised us. That's what can be difficult about predicting earnings. Not only do you have to have the idea of a beat or better than expected or worse than expected, you have to assume what the market will react to it or any type of forward guidance that could send the stock surging or falling despite what they actually report for earnings. That's why these plays can be difficult, but options will be the strategy for that. But if you're not in open positions, it's generally a good idea to stand aside of earnings and let them play out, let the volatility compress back to a normalized range, and then start to play your trades. And of course, use these for selling premium. For example, in the other examples, JP Morgan, Wells Fargo, use them for other examples, particularly in selling premium. So Goldman Sachs, once again, has a earnings-based play, 52% implied volatility, which is about $7.50. That is added to and subtracted from the price. So in this example, taking it at roughly, let's say, 180 per share, that will take us up to, I'm going to jump inside the levels here, but to about 187.50, thereabout. And from that, we'll go from 180 down to roughly 72.50, which is roughly here at the lower bound of the weekly expected move. So even though we see this for our typical volatility, the earnings play could take us, per the options market at least, up to 187.50 or down to 172.50. So either way, if you're playing this and you don't want to play the volatility, stand aside. This is going to be true for Netflix as we talk about that later in the week. But right now we're focusing on financials. So that's your play into Goldman Sachs. This will compress and these levels will become more normalized after the earnings are released. And again, just take a look at JP Morgan for that example. Earnings were today and the volatility has returned back to a more normalized mode. And we'll finish by taking a quick look on the daily charts of all these stocks. The main idea I have for you for swing trading or short-term intraday trades is whatever the broader market does, most sectors will do. And what the sector does, most stocks in that sector will do. Of course, there's variations, but that's the general way to think about levels, spots, markers, expectations, and thus trades. Will the financial sector fall from resistance? That's 25 per share. If that happens, probably the broader market does as well. Or do we see an extension higher? That could take us above 25 into 26, maybe even our upper pivot at about 26.50 per share in the XLF. One quick overview takes us the same logic. We can extend this further, and JP Morgan has its 50-day exponential and its pivot point at roughly 102 per share. That's going to be your pivot point and alternate thesis short squeeze play above it. Otherwise, bear play or caution or take profits into an achieved target. The same logic holds for Wells Fargo. It's a little bit shy of the 50-day moving average, but we have a pivot point at about 50.50. We'll even say 50 per share or 49. Not really a clear level as we saw in JP Morgan and the others. Nonetheless, this is our pivot area. Above it pushes us towards about 51 or maybe even 52. Otherwise, cautious beneath it. Now, these don't have earnings yet, so we're going to see how these play out. So be a little cautious if you're trading these. Bank of America, pivot point is roughly 27 per share. That's above the 50-day moving average. We have US Bancorp. That is in between the 2050 and just shy of the 48, roughly 49 per share level. Look to play anything long above 49, and we have our return inside this range if above 49 per share. Otherwise, caution beneath 48. Finally, Goldman Sachs. We'll carefully watch this one, and this is how we were looking at our up or down play in Goldman Sachs. Just kind of take a look at how that logic plays out via the expected move, $7.50 up or down. We're going to watch if it goes to 187.50 or 172.50. Could go either way, and it could even exceed these if there is a major surprise. Odds are it will stay within these boundaries in tomorrow's trade. And how does that play out on the daily chart? Well, here's the 50-day moving average. That's about 186 per share, and otherwise down to our pivot at 170. Once again, whatever happens on the broader market, we'll take a look finally at the S&P futures. It's into the same spot. Key level, 2626, 2600, and the 50-day average. It's no surprise that the financials are right there, resistance, key pivot, 50-day moving average. The expectation is for a sell. The alternate thesis, protect yourself or profit from an alternate thesis bigger move, is going to be above these key pivots. This is Corey Rosenblum for your Theo Nightly video for January 15th, 2019. Take care.